Hello, I'm Diane Arnold, Director of the Longwood Small Business Development Center located in Danville, Virginia. Thank you for joining us today in a series of videos we've done to answer those frequently asked business questions. Now my guest is Larry Harris. Larry is the Director of the Longwood SBDC in South Boston, and our topic of discussion today is to answer that age-old question, what is my business worth? So I want you to join me and greet Larry. Larry, so nice to have you here today.
Thank you. Appreciate you asking me to come.
All right, great. The first thing I'd like to ask you, Larry, in your opinion, what are the maybe top 5 reasons that someone really needs to know what the real true worth of their business is, the value of their business?
Okay. I think first of all is to compare your business with other businesses like your businesses. Certainly whether we want to recognize that or not, at some point in our life we're going to reach retirement age. And certainly we need to keep this in mind as we prepare for retirement as well. If we're looking at trying to get an outside investor to invest money in our business, certainly they may want to, we need to have an evaluation for that as well. And then if we're looking at maybe a merger or an acquisition, this could also be a part of that. And if we're looking to acquire capital, certainly we need to know the value of our business, because certainly whoever the lender is wants to know what our value of our business is.
Right. They want to make sure you're a good, strong business and
That's
they're
right.
going to loan money. Now, Larry, those are good reasons to be understanding the value of your business. But unfortunately, in the real world, there are often some downsides to owning a business. So there's some reasons that are adverse conditions that you run into where you also need to know the value of your business. And I'm going to ask you to comment on that.
Okay. Certainly if our business is set up as a partnership, certainly when we started our business, everything we might have got along fine together, but maybe down the road we had a disagreement, or we're having a disagreement, and we may decide we no longer can continue as a partnership. So we need to determine a value either for one of the partners to buy the business, or for us as partners to sell the business. So that's one thing that we need to look at. Also, if there happened to be a divorce, certainly the parties involved there would need to know the value of the business in order to settle. In case there were bankruptcy, and certainly we hope you don't have bankruptcy, but there are, sadly to say, there are cases where businesses do go into bankruptcy. The IRS can certainly come in and tell us to sell our business to pay off our debt. So we need to know exactly what our business is worth then as well. And it could be other disputes that we need to know the value of our business in order to settle the dispute.
Yeah, and a good rule of thumb would be to have an agreement in place for all the owners within a business, what to do with that business in the event that you have to sell it. So that we can help you as SBC directors to draft such an agreement.
Diane, when you have businesses come in and talk to you about this particular subject, what do you see?
Well, the first thing I see, Larry, is that anybody wanting to sell their business really overvalues what they think it's worth, and that's just, that's human nature. We always think what we have is perhaps it's more special to us, more important to us and to other people, and so that's why it's important when you do this that you work with somebody who is impartial and gives you that third-party viewpoint. When people come in to buy an existing business, and I'm looking at it with them, we are understanding that we are buying the future revenue streams, and we're paying for the past success, and let me stress that, success and goodwill and reputation of that business. And Larry, as you and I have often said, the real value of any business is what buyers were willing to pay. So, that just comes down to it. So, there are some business valuation methods that Larry and I work with, and I'm going to ask him to comment on the first one that we hear so often, and that is the old rule of thumb for the value of a business. Larry, you want to explain that a little bit to
Okay.
our viewers?
Like I said, we could look at 2 to 3 times the cash flow. Certainly, that's one reason you certainly need to have a book set up to bookkeeping, so you know exactly how your business is cash flowing.
Absolutely.
Your net profit from your tax returns certainly is another way. Owner and family salaries, we certainly need to look at that. The owner benefits, it could be all different types of medical, it could be medical, auto. What other kind of benefits is this company paying for? And then certainly we could look at 1 1/2 times the cash flow plus the furniture, fixtures, and equipment divided by the inventory at cost. And then certainly we should look at maybe a 30% to 150% of total revenue.
Okay. We help you as SBC directors to look at the financials of an existing business and add those items that Larry just mentioned back in, so we can get a true picture of what that income stream is going to be, and that based on that we can tell whether or not you can borrow money and actually make a profit yourself with the debt service and that income stream. Another way that we often use is Larry and I have to send people to appraisers, business appraisers. That is not an inexpensive service. You're going to expect to pay several thousand to many thousands of dollars to actually get a business appraised. And the final value approach is that of the asset-based, looking at what it would cost to replace that business in terms of the purchase of the equipment, the furniture, the fixtures, the inventory. The problem I see with that, Larry, and I guess you see that too, is that you really underestimate the value when you use the asset-based approach, because you fail to take into account the goodwill, the customer base that's already built, the distribution channels that are already set up. So there's so much extra intangible to a business that you just you miss out on a lot. Now, Larry, can you tell me who you advise your clients to use in terms of getting an evaluation?
Okay, I would suggest to them that they seek professionals such as a CPA. Also, that they seek someone who would be impartial.
Yes.
And that's certainly it could be certified, it could be independent, but certainly somebody who's impartial and someone who is professional and knows what they're doing.
I often get asked the question, or told my family thinks it's worth this, my friends, and we have to quash that and say no. We need to get somebody who works with us all the time. And my preference is always to send them to their CPA first. We are happy to work with them, but if it's a very complex business, that we certainly want the CPA involved. Larry, you mentioned exit planning, and you and I, as the viewers can tell, are getting close to that ourselves. So what are some things that a business can do to increase the value of their business as they look towards selling for one reason or another?
Okay. And I think this is something we see, Diane, a lot of times, is that when a business is getting ready to sell, is that the lenders are going to require that they see 3 years worth of tax returns.
Yes.
And a lot of times you will see a business has not made any money the last 3 years. Whether they did or not, it shows on the tax returns. So really, I think that's something that show a profit on your tax returns, or show a profit. It's certainly, like I said, make a profit for 3 years or more. And you want to optimize the equipment and the inventory. You want to see revenue growing, and then see some margin improvement. Keep your expenses under control. And it goes back to this old saying, failing to plan is a plan to fail.
Absolutely. Get your house in order ahead of time. Make your business look as good as you can. Pay the taxes. Thank you, Larry, for joining us today. We hope that if you have questions, you'll check our website out. Thank you again for joining us today.